Well, let's talk about gold. Gold really in focus. We've got geopolitical tensions. We've got some uncertainty around the political situation in the United States. Let's go to Bas Kooijman from DFS Capital. He's the CEO there, and he joins me now. Hey, Bas, nice to see you there. We were
Hello,
talking
good morning.
about potential safe haven flows into gold, being part of this uncertainty around the U.S. political situation. Have we seen that?
Yeah, absolutely. Thank you for having me, Nadine. It's been a pleasure. It's crazy how the market reacts to all kinds of news events that the market already should have priced in. We are again looking into the rate cut situation for September and onwards. We of course seen geopolitical tensions all year long, and gold rising steady by about 18% year to date. Of course, we have seen crazy news this weekend with the shooting on former President Donald Trump. Gold market directly reacted, and the US dollar market directly reacted. Market opening, dollar rising, and gold falling by 0.4%. Recovery day yesterday with 0.8% profit at the end of the day. Gold recovering, but it's really very active market and very high volatility lately.
Yeah, okay. So talk to us about that high volatility in gold and what are the big drivers of that beyond the immediate Trump trade?
So it's media, it's the geopolitical issues worldwide where gold always been falling into that safe haven area where people and investors, individuals from the Asia market lately have really been flocking into the gold market. Earlier this year, we saw the crypto ETFs, the Bitcoin ETFs being approved. And at the same time, when people start to invest in more risky assets, they sometimes hedge that with a more safe asset like gold. So we've seen that volatility going up and down very aggressively with this kind of actions of both central banks actively buying and also individual investors and institutional investors doing the same.
Yeah, okay. We've got a lot of individual investors watching right now, and many of them, I suppose, are wondering what the best way is to gain exposure to gold. Whether it's through the physical commodity, whether it's through an ETF, whether it's through some Aussie explorers. So maybe you can just say where you see some of the biggest opportunities now, Bas?
Yeah, it's for sure easier to buy gold via an ETF or any online way. In the long run, I think it's very good for people to have an investment basket of physical gold. It sometimes feels very far away. There's online providers who are able to offer physical gold in someone's portfolio. Having about 5 to 10% of someone's net worth or a company's net worth in physical gold really helps when there are this kind of worldwide tensions and the market's prices right for the gold market growing, and therefore helping your portfolio when stock markets have a hard time. When there's other parts of your portfolio having a harder time, gold will make up for that if you have about 5 to 10% of your portfolio in physical gold.
Yeah, so you still go with that 5 to 10% sort of rule of thumb that's been talked about for a long time. So
Yeah.
how high do you see the price going, Bas?
We see a surge that went very quickly over the last couple of days. There's been rumors of new records above the 2,500 range, and they are not so far away. If we see the market pricing 35 points in only 2, 3 days, especially with this kind of news, there might be a little bit of a pullback today. The rest of the market day, London's about to open. But we started positive and 2,500 and then up to maybe 26, 27 towards the end of the year is definitely an option for the gold.